Good morning, everybody. Hey, it is Thursday, the 16th of May. Hope you're doing well. As we talk about some earnings, we've got Walmart and Under Armour and some more to talk about here in just a few minutes. Before Dave joins us, let's not forget that there are so many things that you and we have no control over. You can take control of your portfolio by knowing how much risk you have and how much risk you should have based on your current circumstances. Give me a call at 863-382-0037 to schedule your core retirement design. Hey, with that, we got Dave coming up next.
8:42 here. It's 18 before 9 now at Light FM. That's just human nature. It's human nature to try to climb on board when the stock market starts running up, too, and it looks like that's what's happening as of yesterday anyway. Let's find out what's going on with your money, and because it's important, we have an expert with us each morning. Phillip Statler from Statler Financial Services is on the phone with me. Phillip, good morning. Boy, did we have a great day yesterday.
Boy, did we ever! What we see some all-time highs. I think across the board yesterday with the S&P 500 getting closing over 5,300.
Yeah, I mean, this is almost scary. The Dow starts out the morning after going up by 350 yesterday. The Dow starts the morning at 39,908. A 100-point run-up in the Dow is not at all out of the range of reason. That's even a slow day on the Dow. So there's an off chance we could cross 40,000 today. Standard & Poor's, you said 5308. That was up 61.5 yesterday. And NASDAQ gave us another record close, too, at 16,742. It was up a full 1.4%, 231 points yesterday. All that based upon one data point. The consumer price index was a little bit better than they expected and showed inflation slowing down with one data point. And, you know, pardon me for channeling Alan Greenspan, but I'm seeing irrational exuberance out here, aren't you?
I am, Dave. I mean, I'm looking at the numbers, and the day before we didn't have a good number when it came to inflation. So wholesale inflation was up. Producer price index was up. Consumer price index not up as much as expected. But at some point, the wholesale, the business guys are going to pass that cost on to us, which means eventually those CPI numbers have got to go up.
I mean, we're still looking at 3% inflation per year, which is still 50% more than the Federal Reserve wants. I'm not seeing any indication for a change. And the Fed governors, whenever they hit their rubber chicken speeches, are basically all saying the same thing. Even the doves on the Open Market Committee, when they're doing the free food speeches where they can, before the meetings close them down, they're all basically saying, even the doves are saying, well, December is probably going to be the earliest we're going to be able to get around to a rate cut. But as soon as somebody utters the word rate cut, the amateurs climb on board, start buying stocks like Chiclets. Even my fear and greed index is now this morning swung over to greed. You and I were kind of giggling before we went on the air. When that happens, that means the amateurs are climbing on board and things are about ready to go to heck in a handbasket. I don't want to be a cynic, but it tends to work that way, doesn't it?
It does tend to work that way, Dave, and it is. But I'm seeing actually, I don't know where I saw this. I can't find it again, but there was some headline that said, "Hey, the markets think that we might get a rate cut in September." I'm thinking, what are they smoking out there?
Well, it's got to be pretty good weed. Remember, it's recreational up in New York. They can get the good stuff there. I see no indication that would make an economically wise decision cutting rates in September, unless somebody in the Democratic National Committee comes in with a bomb threat at the Federal Reserve, because there just isn't anything there that doesn't affect, that doesn't relate to politics that would indicate that rate cut would be in order before the election.
Yeah, I'm not seeing anything at all either, Dave.
It was weird. Anyway, everything was up yesterday. The blue chips were up. The more adventurous NASDAQ exchange was up. Pretty much everybody was up except for, poor GameStop and AMC. The meme stocks finally got the blue off their road. How far did GameStop go down? I don't have a percentage, but I know they fell like a rock.
Let me see. I do have some numbers here. Let's see if I can go find them real quick here. They were on my. Here we go. So AMC this morning is down 5.3%. GameStop this morning is down 10.5%.
Boy, that funky guy on Reddit must have said something weird again, or didn't say anything, which is probably more likely, right?
Yeah, exactly. So it's gonna be interesting to see how that one plays out.
Oh, yeah. The way things ran up yesterday, just talking about the indexes again, they issued a new set of projections for where the Standard & Poor's 500 is going to end the year, and these moving targets always happen. The big brokerage firms come out. The lead estimate right now is they expect the Standard & Poor's 500 to end up at 55.30 for the year. That's the top end. Then you go across the entire range, and boy, talk about a moving target. The cynics at J.P. Morgan are still projecting the Standard & Poor's is going to end the year at 4,200, and it's starting to sound like those boys are starting to predict an economic crash by the time they hold to that prediction, right?
Yeah, 42. That's going to put us in a bear market, isn't it?
That would be, let's see if we, from 5,300 to 4,200, that'd be a full bear market decision. They haven't changed theirs since the beginning of the year, but the range, I mean, normally at the midway through a year, generally the predictions for how the market is going to end the year tend to start getting closer together. But geez, they're across a full 25% range right now. Nobody knows what the Samuel's going on.
No, and I find that interesting. That's a pretty big dispersion between the two groups.
Yeah, really it is. Like I said, a J.P. Morgan sitting out there saying 4,200, and I mean, I'm not sure I want to be a client of somebody that's basically saying sell before we all die, but I'm also worried about a guy that says it's going to go up another 10% over what we got. Dumb stuff coming out of the government this morning. We get sketchy pictures these days. They're sleeping in a lot with our tip sheets, I'm convinced. But first-time unemployment claims a little bit off from last week, but still close to what they expected, 220,000, which is actually an increase over those low 200 teens that we had for a while. So it indicates the employment market is still plenty healthy. And housing starts went up by a little bit from last month. So the housing market is holding up all right, even while inflation might be getting a little more under control. Was there any vociferous reaction on the markets after those numbers came out at 8:30?
There was a little bit of downturn when the real estate, I think the housing market stuff came out. The initial jobless claims, I mean, 10,000 jobs was, 221 was what was expected. 222 is what it was, down from last week. I think the big thing was probably the housing starts. The expectation was for it to be in basically 1.4 million new housing starts this year. And that would have been up from the prior reading, which was, I saw it adjusted to 1.29 million. And it actually came in this time at 1.36. So less than expected, but better than March. And I didn't see the housing permits. It didn't print anywhere.
I haven't seen that come across my tip sheet either yet this morning. The big kahuna report pretty much on the tail end of earnings season, and now we finally get to find out what America's biggest retailer did. How did Walmart perform last quarter?
Well, I will say this, that Walmart did well. I like this headline. It says the discounter has been able to win over high-income shoppers, and that definitely has benefited them this last quarter. Walmart came out and earned 8 cents more than expected at 60 cents a share. Revenue was about $2 billion more than expected at $161.5 billion. Some nice numbers there. Their e-commerce made some big gains this last quarter as well. They're trading up 6.2% this morning.
And that's a lot of capitalization going up there, as big as Walmart is, when you start seeing a 6% increase.
Oh yeah, exactly. So that was some good news there for them. Now we did have some not so good news from our friends at Under Armour. Under
Uh-oh.
Armour, yeah, sorry to say, I'm not sure what their actual earnings were because it's nowhere in the report. The expectations were just overwhelming, I guess, to the wrong side.
Hmm.
The expectation was for that Under Armour should earn 59 cents this next quarter, and they came out and said, well, we expect that we're actually going to make 18 to 21 cents a share. So
Whoa.
yeah, so they're having some issues, and they're down 11% this morning.
I was going to say, that's a cavernous miss as far as guidance is concerned.
Yeah, exactly. Another one that's up but struggling a little bit is Cisco. Cisco came in and they did beat on earnings and on revenue slightly, and so that was some good things for them. They did have some benefit, I guess, from some acquisition they made earlier. I don't remember it, but it helped contribute to their revenue side as well. And so we got Cisco's actually trading up almost 2% this morning, Dave.
Cool. Got time for one more?
All right, so let's go with Canadian Goose. I think they're a coat manufacturer. They had a good quarter. They beat on sales and earnings for this last quarter, and so they're trading up almost 13% this morning.
I hope they aren't killing too many geese. Okay. Resetting the table, it was an update yesterday, 3 new records on the 3 primary indexes that we track. I've been noticing the futures have been just kind of drifting gradually downward ever since midnight last night, telling me I think we might be looking at some profit taking today. 45 minutes before we open, what are we looking at, Phillip?
Dave, I think there's probably a good chance that could happen today. We got the Dow is basically $20 to the red. And so the S&P 500 is $1 to the good, and the Nasdaq 100 is about $5 to the red as well. On the other side of the coin, we got silver up another 1/4% to $29.79. I did see yesterday that it did cross over 30 for a little while yesterday.
Wow.
Gold is down 1/3%. Crude oil back up 0.8%. It's trying to get to 80 again, Dave. It's $79.28 a barrel.
Yeah, and shucks, and I need to fill up with gas over the next day or so. Overseas markets, the Asian Rim responded to our yesterday, and they were up pretty well across the board. We're a big trading partner for everybody, so when we have a good day, so do they. We had some gains upward of 1.5% on the Asian Rim. Europe, on the other hand, is looking at our futures and saying, well, let's hold steady and see what they really do today. Overall, European indexes are down on average between a 1/10 and 0.2%. We're not talking about a sell-off, but they're being very conservative over there halfway through their trading day. Getting a retirement plan together to make sure I can retire in the lifestyle that I've become accustomed to, that takes a fresh pair of eyes to get the risk out. Phillip, how do I find you to get that help?
Then give us a call at 863-382-0037 to schedule their core retirement analysis. And then they can join us for our Statler Financial Radio show every weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM. And they can catch that radio show on any of the podcast stations out there. Any of those platforms, we're on there. The radio show is on that platform.
Cool, we'll do it. And we'll be back again tomorrow morning to tell you what happened today and what's likely to happen tomorrow here on Light. I'll see you then, Phillip.
All right, have a good day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
It's nice when you get everything on your list.
And folks, again, I want to thank you for joining us today. Have a great day. Join us again tomorrow, same time, same place. Until then, have a good one.